Yeah, thank you for the opportunity to give me the chance to kind of present my research here at the Geary Institute. I'm new lecturer here at UCD since January, so for me it feels like kind of an inaugural, quasi-inaugural lecture. I mean, I'm not a professor, but it feels like that. So what I will do now in the presentation is I will give you kind of a broad overview also about my research background, because it's still kind of I want to use that as an opportunity to give everyone kind of who came today a flavor of kind of the several research projects I've been involved, and also give you an overview about my research interests. At the second part, and that will be the main part, there is kind of some substantial evidence from my PhD research. Mainly, I will also draw a little bit from kind of other parts and kind of put it kind of together, try to put it together into coherent story in the end. So what I want to start now is kind of give you kind of the background where I'm coming from, my research interests, and I will guide you through it. So I hope you can see it also at the back. So my background is in comparative social policy. So as you might already picked up, and thanks for pronouncing my name properly, Köppe. With the umlaut, some people struggle with it. So it's kind of, I'm originally from Germany, but I also lived for a while in Sweden, so I can actually, goes a little bit beyond ordering köttbullar in Swedish, at least, but I also worked on the US, lived in Scotland for a while, and now it's Ireland, and all that kind of brings me to kind of look at the privatization of marketization of social programs. So I'm looking at private pensions, private schools, but I also look at housing wealth and how it's used for pensions, long-term care. That also includes, for instance, unemployment insurances, mortgage payment protection insurances, all this kind of stuff. That's what I would be interested in researching, and actually Ireland is also a really kind of interesting case because a lot of private schemes are around in this country. Today, the key focus of the presentation will be on the politics of these markets. So what are kind of the political and institutional driving forces for these markets? But I will also give you a flavor on kind of user behavior and markets and their attitudes towards choice. I will give you some ideas about discourse analysis of these welfare markets, and a kind of a new area I'm exploring right now, which are intergenerational transfers, which are also kind of a private means for welfare to some extent. So my research on user roles and school choice, I've started that with colleagues in Germany. So we look actually how kind of the user role of the traditional claimant or citizen, I think you can't see that so well here on these slides, but how they move towards being a consumer or co-producer. So we really look at the behavior and attitudes, and particularly on private schools, and I can give you more details on request. Then I'm actually working and still kind of contributing to a major project. It's called the Mind the Housing Wealth Gap project, where we look at housing wealth and how this is used as a private means for welfare. It's a net pension, it can be used for long-term care, but even people probably use it to bridge periods of unemployment when they take a mortgage holiday. This kind of things I would be interested. I just picked here kind of some results from a sequence analysis. It's a longitudinal analytical method, and it produces these nice graphs. What you see here, for instance, that most people who enter a mortgage in the UK somehow become successful owners or still kind of manage their mortgage successfully after 18 years. But they dip in and out of housing wealth. You would see that on these small kind of red and blue episodes where they kind of take something out of their mortgage or increase their housing wealth. But you also see that there are some kind of, they're in the minority, but you also see some, for instance, temporary renters who have a mortgage initially, rent for a period of time, and then become mortgages again. So these are the kind of questions I would also be interested in investigate with the Mind the Housing Wealth Gap project. The website is there, so you can look at kind of, I'm not the only researcher on this project, so you might find some interesting results as well. Together with colleagues at the University of Bremen, I'm also kind of interested in discourse analysis. It's kind of quantitative discourse analysis, but we do there and we combine it with network analysis. So we look at how kind of the legitimacy of the welfare state has changed when kind of a market terminology was introduced. So you see here, for instance, we call that the welfare triad of freedom, justice, and solidarity. But you also see kind of positive associations with freedom, for instance, if it's about competition and individual responsibility. They actually kind of pull at this welfare triangle and pull it towards kind of a market kind of rhetoric. That's kind of also one of the research I have done, and also fits in this overall interest in welfare markets. We had just submitted it last year, and we hopefully it's successful. It's a project proposal on the dark side of intergenerational transfers. Intergenerational transfers can be anything where kind of parents pass something on to their children, or the other way around, children provide some welfare for their parents. And we look at actually the negative side of that, because usually the kind of the discourse around that is really positive. Kind of intergenerational transfers are good, they are good for kind of generational solidarity and so forth. But we think, oh, there is maybe also a dark side attached to these generational transfers. And we look, for instance, at transaction costs, also illegal transfers. Then probably the most kind of most negative are, for instance, forced transfers where kind of grandparents or parents are exploited. They only have a small room in the house, whereas the house is already signed over. So, and kind of the dependencies between family members and what it might have really has negative welfare effects. And so that would be kind of if it takes off, we would do that in cooperation with a network where I'm network manager. It's called Integrate, International Network of Generational Transfers Research. So that's kind of, again, linked to the privatization of welfare, where intergenerational transfers become more and more important. Probably the most recent development is kind of the bank of mom and dad to, for instance, get a deposit for a house. So that's kind of, right now, at least in the public discourse, the most important topic, and has the greatest controversy. So, but today, the main, a contribution will be actually from my PhD. That's a book. It's only in German, unfortunately, but there are some papers around, and you can ask if you're interested on that. So today I'm going to present you how to measure and the scope of welfare markets. I'll do that in 3 dimensions. It's finance, provision, and choice. And then at the second part, I will talk about the regulation and politics of these welfare markets in a comparative perspective. So the main evidence is from Germany, Sweden, and the US, and it will focus on pension and education. Because I announced that, at least in the abstract, I also felt obliged to have to do something about the UK. So there is some kind of evidence on the scope of these welfare markets from the UK, just to give you a flavor how it pans out in other countries as well. So to start with, the first dimension, or how to measure the scope of welfare markets, is to look at the finance dimension. That means all the private contributions towards private welfare schemes. So that means there could be contributions from employers, employees, or any kind of contributions towards tuitions, could be pension contributions. This kind of things I would measure as the scope of the finance side of these markets. And that gives you only a flavor. It's the story across the OECD is similar. These contributions have been increased, in particular in the pension area. And you see, for instance, kind of the US is the most developed kind of private pension, has a kind of largest scope of welfare market finance contributions in the pension area at least, it's about more than 2% of GDP of our kind of private contributions into this market. Roughly a third of the total contribution, so kind of 2/3 go into the public mandatory earnings-related pension scheme, whereas 1/3 goes into any private scheme. That means occupational and individual private pensions. Per capita, that's around, in 2006, more than $1,000 per year. If you look at kind of Sweden and Germany, they're actually laggards. There hasn't been much a market around, at least not largely promoted by public policy. There have been life insurances and so forth that could be used for kind of a private, as a quasi-private pension, but they were not really relevant. What you see then in the 2000s, there have been major reforms, both in Sweden and Germany, and especially in Sweden, because it's mandatory, you immediately had a kind of real increase of these contributions. They're now about 1% of GDP, and but only about 12% of the total contribution. That will rise to about 13% once all cohorts contribute to that system. And that you see kind of a small dip actually in the total contribution, because that was kind of a slight recession there, and simply younger people were not entering the labor market yet. So that's why those who were still in the old system, they just didn't contribute so much into the new system. And then you see Germany, it's voluntary, and that's why it's also, you see an increase, it's substantial, but because it's voluntary, the whole kind of contribution into this new private pension called Riester-Rente hasn't been that big. If you look at the distribution, where are these contributions coming from? It's also quite interesting that they are still subsidized. You see about a third of the German Riester pension is supported by tax breaks, but also by direct allowances. And the same in the US. That's only tax breaks. It's about a quarter. And also Sweden. Also in Sweden where you see that. But it's you wouldn't expect that. You could say, well, Sweden, kind of, that's a paradise of public subsidies and the welfare state from cradle to grave. But no, it's actually only 10% are their public subsidies into this new private scheme called the premium pension. And that's no tax breaks, that are direct allowances for career breaks due to having a child. So really dedicated support of the private scheme there. And then you see in Sweden and the US, it's kind of split between employee and employer contributions. So the employers still have a stake in that, whereas in Germany it's only employee financed, and then you have a small kind of part here for self-employed. So despite the marketization, what you can see from this dimension is the public still supports these markets. That's kind of the public treasury still kind of subsidizes this market quite substantially. And that's even stronger in the education area. So Swedish private schools are now 100% subsidized by the government. In Germany, it's about 80%. In the US, it's a little bit more complicated, and I will come to that. That's why I didn't present here a figure. So now we look at the provision of, so how many providers are in the market, how many people are actually have taken out an insurance, how many people work there, how many insurances are sold. These would be kind of the provision of the private side of welfare. And here, that's my only UK slide, because it's quite a quite interesting area and completely under-researched, and it's really difficult to get good data on that. What you see here is the coverage of 4 different insurance schemes, private insurance schemes. IPI, that's this blue line, that are income protection insurances. So they cover for unemployment and sickness. And as you see, over in the 90s, they kind of became increasingly popular in the UK, and but kind of stagnated around 88% in the population. So they actually cover for the retrenchment of other welfare schemes, like, for instance, job seekers allowances, to give you at least people some kind of income replacement. What you also see, and that's quite important, is the mortgage payment protection insurance. Again, it covers for sickness and periods of unemployment, and doesn't replace your income, it just pays the mortgage repayments. And that actually underscores the interlinkages between having, on the one hand, increase of private insurances, but also a move towards asset-based welfare. So it becomes much more important not just to maintain the income, it's also important to maintain the asset accumulation, so that people actually can rely on their housing both later in life as a net pension or to finance long-term care. And that's really pronounced in homeowner societies like Ireland, UK, US. You find that to a lesser extent in Germany or Sweden. Then we have also kind of critical illness insurance, that's this line, and there's a huge trade-off, I would say, between long-term care insurance and mortgage payment protection insurance, because long-term care insurance never really took off in the UK. So I've explored that in another research project a little bit more, but I won't go into much more detail. But just to give you also kind of a flavor of what I understand as welfare markets, and that would be included in that. So now we look at schools. Again, in the pension area, you would see a similar increase of private coverage across the 3 countries. But the schools picture is a little bit more interesting, because you see kind of a flat, stable, mature private school market in the US around kind of 12% or since 1950, so not a lot of change. And then you see kind of a move towards private schooling in Germany, but it's a really slow move. So kind of I would call them subversive consumers, because there wasn't any policy change, there wasn't any change in the incentive structure, just a drift towards private schools, especially after the PISA shock. There has been a lot of discussion that the public schools don't provide a good quality anymore, and that could be simply an indication, okay, people are moving towards private schools and they hope to get some kind of better education.
Stephan, is that West Germany or?
That's after this dip, that's whole Germany, and you see that dip because there weren't any private schools in East Germany. So that's why it went down in 1992 when the kind of statistics were merged, and then you see kind of a catch up as well. But also kind of generally a move. It's still kind of, you have still a lower private school coverage and enrollment in the eastern part. So. And then I still think this is really kind of the most interesting probably line in this whole figure is the extreme growth of the private school sector in Sweden. Again, if we think of Sweden as the social democratic welfare state where everything goes through the state and strong state involvement and everything is provided through the state, you can see that up to the end of the 80s there was a private school enrollment below 1%. Actually, there are no real statistics about that. You have some kind of no good longitudinal data for that. You only have kind of some surveys that measure cross-sectionally, and then you see kind of this major increase. And that's due to reform. And I will go into the details of the reform in a second. But they created kind of a voucher market for private schools. And in Sweden in 1992 it was a conservative government, and then it just went through the roof. Now actually the market share is in some areas of Stockholm, you have at the upper secondary schools almost 50% private school enrollment. It's less the case in rural areas and less the case for primary schools. But still you see this major increase. So right now it's around actually 15%. And that's quite puzzling because you see kind of this major increase of the private schools, and that's really doesn't really fit our understanding of the of the Swedish welfare system, and it actually outpaces the US development.
Just to clarify, when you say private schools, do you mean not publicly provided rather than fee paying?
They are non-fee paying, but they are private providers. They are either non-profit, maybe right now it's 80% are profit providers, usually as limited companies, even sometimes traded at the stock market. So that's kind of the picture right now. Initially, in the early 90s, you had a lot of teacher initiatives, non-profit providers, actually denominational schools that were kind of the early movers, and around the 2000s, limited companies, profit-making companies were taking over. They have now kind of several. I think the biggest provider, for instance, I mean, Sweden is a small country, the biggest provider has about 20-25 schools. And they're also going into other countries as well. So they're one now runs a school in Germany, for instance. So they're kind of expanding as well. Sorry, I have to go back. So, but this is puzzling. So no change in the US, though there was a lot of debate on school choice in the US, and this statistic doesn't show you two developments in the US that are obfuscated in the official statistics. The first thing is public school vouchers for low-income households. You have in 3 states low-income households have access to school vouchers. So it's means tested, and they can then, with this school voucher, they can enroll a private school. It never really took off due to various resistance from unions and parents, and it's quite interesting that also referenda were quite important to hinder the introduction of these school vouchers. So that's kind of how they never really took off. But they are also around, and you don't see that in this figure. A second one are charter schools. Charter schools are basically public schools with a school board, publicly run, but the provision, so actually the real provider of the school services, that can be outsourced to a profit-making company or a non-profit school provider. And here, no, it's going automatic, that shouldn't happen. So you see now, for instance here, only the students at EMOs, they are education management organizations, and these are the private profit-making companies in the charter school sector. And these, because they are treated in the statistics as public schools, they don't show up in the figures, in the figure I presented previously. And you see kind of an increase over 10 years from 50,000 students to now 350,000, and it's still increasing. Again, you also have non-profit making, and they actually now have a bigger market share than the profit-making companies. But what it also introduces, it introduces choice for students, and you have a real competition between them, which I would classify as a market. So just to give you an idea that even if you look at the official statistics, sometimes you have underlying markets that are not observed in the official data. So it's always worthwhile to look at what's really going on this, on the provision of, for instance, private schools or other markets that might be hidden. And then I want to flag up a third dimension of this to measure the scope of markets, and that's choice. And I argue that you actually can have choice that will introduce markets, that will introduce competition, and you can have that in a completely public environment. So you can have, for instance, choice between public funded schools, public provided schools, but still you would create a market, a competition for the brightest students, and probably kind of introduce also the kind of inequality effects which often come with markets. It doesn't have to come with these inequalities, but I argue once you introduce choice, that will happen to some extent. There are different stages of choices you can have. It's the market entrance, actually then the choice for the product or the provider, and then it's also about kind of the subsequent switch. Can I actually switch once I choose, for instance, a private pension? Can I switch without huge penalties because I think, oh, that's now a better product that actually better suits my changes in my, for instance, over the life course? How high are the transaction costs for these switches? And of course, that also accounts for switching between private schools, because people might not be happy with that. What are the kind of also the emotional transaction costs for these things? And then also, is it possible to actually exit that market? So that would be kind of the institutional characteristics of choice, and then you can look at the actual choice behavior and attitudes towards choices. Generally, the data is really poor. We have little knowledge about that. It's for my PhD. I again sometimes I could get some snapshots for that, but it's really difficult to get good comparative data and data over some years. Still, the general story, not just for the 3 countries, but also where I could find some OECD evidence, is also the general increase of options and more exercise choice. And just to give you an example for that is the licensed pension plans in Sweden and Germany. So here you see the around 4,000 pension plans alone in Germany after the introduction of the so-called Riester pension. And then kind of overwhelming market, actually difficult to go through all these choices. And then you also see in Sweden, with a premium pension, around 500, now about, initially 500 pension plans, now around 750. So a lot of options to choose between, but of course, then people actually don't lose actually the overview over these markets and are actually puzzled with these choices and actually make rather not so optimal decisions in the end. What's also quite interesting is, yes?
Perhaps a stupid question, how do you know the decisions aren't optimal?
You for instance see that for in Germany about 10% of the contracts that were kind of taken out over the 10-year period, they're not either paying any contributions anymore, they were cancelled with high penalty fees. So, and that's about 10% of the whole contracts. But again, this is only, you get some industry data for that, but there's no official statistic about that. And that's a real problem. So you get kind of press releases from the industry where you get kind of a snapshot, but there's no data actually how many contracts have been cancelled. We don't really know that. It's only, I only have the press releases, and they give you a rough estimate for it, but I find it really unreliable data. So it's only kind of, I would call that anecdotal evidence in a way. But there's kind of indications that people actually are not happy with their initial choice they made, and then they cancel it, or actually don't pay any contributions anymore. So why are they not paying any contributions anymore? Because they're probably not happy with the product anymore. So, or they probably have taken out another contract, and they can keep that contract kind of maturing, but they can't. They are not contributing into that contract anymore. So that's also. So again, it's indicative, but I'm not really sure what's going on there. That's why I'm saying I also don't present these figures here, because I'm simply not sure what's really going on in this market, and no one really knows it. Okay, that's kind of, so you see kind of the basic story so far is what I want to tell you with the scope of the markets is we see increase of private finance, private provision, and more choice options, but also more exercise choice. Whether it's good or not, we simply don't know yet. There are also kind of that would be kind of a more interesting field to delve into as well, to look at more at the effects of these choices. But again, I don't have much evidence so far, or just anecdotal evidence on that. But there's also huge variation. So you could see all the country differences between different levels of the scope of markets. And I want to spend the last 10-15 minutes on kind of discussing how it came to this variation of these markets. A final note on choices is also, because I liked that when I received that letter, is sometimes you have private providers. This is my bin collection provider. And they were greeting me as, "Dear customer, thank you for choosing Greyhound households as your waste collection bin service." And that's a false choice. I didn't have a choice for that. Yes, it is a statutory provider I have to choose. So again, it's a market, it's a private provider, but there's no choice with that. So I think that's why it's also important to differentiate between the three dimensions to highlight also false choices that are not a choice at all.
There used to be a choice though in this market.
Okay, but right now I don't have it, so they still greet me as a customer. Actually, they could ask me, "Dear citizen," that would be probably, or whatever. I'm not sure. Probably there's no word for it, but at least it's not customer. They might call me, but it's not "thank you for choosing." That's simply wrong. I didn't choose that.
Crap, sir.
So, the main argument I want to go through in the next stand that might be controversial, so I'm looking forward to your feedback. So, what I want to challenge now is kind of the hypothesis that marketization of social policy implies a move towards a liberal welfare regime. The first proposition I want to make is that welfare market regulation varies between countries and there's no trend to uniform liberal markets. The first point. Second point is kind of the existing institutional features are kind of serve as templates for the welfare market creation. So existing institutional features from the public schemes, but maybe also from neighboring markets like life insurances, are transferred to these new markets that have been created in the 90s and 2000s in the countries I've studied. And then the third proposition is that actually, though the institutions play a major role in serving as templates, they're still kind of dominant and incumbent actors. They can kind of change the market regulation to their interests. So these powerful actors, they have a stake in these new markets, and they also try to exercise their power to kind of create market structures that helps them. I'm not sure what happened now. All right, go back. Yeah, I'm worried that it goes back to the start usually with a 5, so okay. So my overall argument is that kind of welfare markets embedded in the welfare regimes and preserve these country differences. And I will do this with giving you kind of a broad overview, and I will rush through 2 case studies, but I still think it gives you kind of a flavor of it. So this shows you kind of the variation of the regulation of these markets, and I will highlight only kind of some areas, so don't look at all these, but it gives you kind of, it summarizes everything, but I just want to point you to your attention to first access. So how do people have access to these markets? And that's the pension markets. In Sweden, the premium pension is universal, so everyone has access to it. However, in Germany and the United States, it reflects actually occupational status. So there's different schemes for employees and civil servants. They are one scheme, but self-employed are left out. They have a different scheme. So that actually reflects the welfare regime of Germany, where you have a lot of occupational status differences. And you have that also in the United States, a kind of quite fragmented schemes, so already there you see some variation between the markets. Then it's also about choice. In Germany and the United States, they're voluntary, and you have kind of completely different setup. That also means that if they are voluntary, they are, for instance, to increase take-up, they are subsidized through tax breaks. In Sweden, they are mandatory, so you don't need any tax breaks to actually increase the take-up. So that already gives you kind of an idea how these markets can vary. And then finally, you have in the US, they are all administered by the insurance companies or the employers. In Germany, you have the typical self-administration, at least to some extent, but also you have now some private administration in that. And in Sweden, and that reflects the social democratic welfare regime quite well, is you have a pensionsmyndighet, kind of a private pension authority, and they manage all the accounts. So they hold the pension funds. They kind of charge the administration fees and so forth. So this is kind of a good example also for kind of a social democratic administration of these markets. I want to show you now an example of Germany and how the insurance industry has influenced the market creation. When I talk about templates of the existing institutions, you can see some traces of the public earnings-related pension scheme in the new Riester pension, the private scheme. So it's differentiated, so you see here the trace, it's differentiates between the occupational status. You also find that in the new scheme. It's earnings-related, you would expect that to some extent. The self-administration I already mentioned. And now the insurance industry was a quite powerful actor when these markets were created. And they had a big proposal in 2000 and good lobby influence throughout the negotiation process. And actually though there were other kind of powerful actors like unions, they actually, the insurance industry was in the end the most powerful actor, even, and that can be shown as they had a proposal how to regulate these new private markets. They said, okay, we want to have an annuity, that's really important, and the maximum lump sum of, oh, that's wrong, sorry, 25%, that was their proposal. And 3% contribution rate, so they didn't want to have any higher contribution because they feared that that would crowd out any other private pension provision. So they still wanted to keep the existing private pension market. And it should also be voluntary. They were really keen on that, and it should be private administered. And actually they got these points all through, more or less. So the contribution was slightly increased, but there were also a combination of direct allowances and tax breaks to increase take-up. There was a lump sum was actually increased to 30%, so that's still kind of more or less what they hoped for. It remained voluntary, and that shows you how kind of powerful actors can actually create markets they later benefit from. In the initial stage, they had 90% market share. Now it reduced a little bit to 80%. So because it was a regulation that really favored their existing products. This market was created along the lines of the existing products. The competitor in the kind of pension markets are banks, but they usually have pension funds. They're really good at that. They don't know how to calculate annuities. And they actually got into the market that these pension funds are now possible, but they still have to guarantee an annuity. And that what left the banks initially out of the market, because they simply didn't have experience with calculating annuities and also to implement the contribution guarantee, which guarantees that all contributions made are at least paid out as a pension later on. So actually the kind of the dominating insurance industry also kind of could defend their market against competitors like banks and pension fund managers. So the kind of final example, I won't go into that table now, but it's about the schools, and the Swedish story is quite interesting. So the Swedish school system is, in the 80s was universal access, basic tuition, but that means kind of includes school meals, transport to the school and so forth. It was free, and the central authority was the Schoolwerket that kind of had kind of sanctioning power on the how schools are run, and schools were run actually by the municipalities. And there wasn't any choice, so actually strong catchment areas, but kind of some limited private options. The new thing that was created now in 1992, it was driven by a conservative government, coalition of conservatives, kind of centrist party, and the Christian Democrats. They introduced school vouchers that replaced about 80% of the public per capita contribution. So schools, to just cover the gap, schools could still charge fees, and they kind of didn't have to provide all the additional tuition like school meals or transport to the schools. So they had some more freedom in that regard. But also, and that's often forgotten about that, the conservatives also introduced not only choice between private schools, they also kind of abolished all the catchment areas. So now people could move between municipalities. And what I call now an embedding in the social democratic regime is that once the social democrats regained power in 1994, they actually made it a social democratic scheme by universalizing the Free Stehende Schule or Free Schule as they're often abbreviated. So what they did, they banned any tuition fees, they made it universal so everyone could access it, and increased the voucher to the equivalent to what the new municipality pays for each student. In line with that, also now private schools have to offer school meals, tutoring classes for disadvantaged students, transport to the school, there has to be a school nurse, all this kind. And I would call that just a second, that they kind of try to embed kind of the odd market that had been created by the conservatives into the kind of social democratic regime. And simply they did that over the period of from between 1994 to 2003, then was the last reform which universalized the whole free school system. So you had a question?
The question of whether it happened in 1994, 2010.
No, it was because it was a staggering reform, first primary schools, then secondary schools. So, but now this scheme hasn't changed in 2003. So, and it was also, and that's what I want to highlight. It's also because it's the second best option for the left. So, the left usually rejects markets, but they try to regulate. If they can't avoid them, they try to regulate them in a way that favors their party preferences. Because that was the support by the left and the Green Party, also with some support from the centrist party, to actually universalize these private school markets. And that's whereas the story in the kind of in Germany is how kind of market providers, insurance companies, how they shape the market creation and regulation. This is a good example how also the left has the capacity, if they have the power in government, to shape these markets towards their preferences. They might, because they were really popular, the free schools, they couldn't really kind of scrap the whole system, so they try to shape it towards their preferences. So, to sum up, kind of what you can see is kind of education markets receive higher subsidies than pension markets, but kind of both markets are supplemented also by public schemes. So they don't really kind of replace the existing schemes. It's kind of these new markets have never really replaced anything yet. There's also a substantial variation between countries, and these neighboring institutions serve as templates, but also the powerful actors can shape them to some extent. So in conclusion, so I argue that the key features of welfare states are preserved in the new welfare markets, and markets are embedded within these new welfare schemes that incorporate public and private schemes. And the kind of, I would say, kind of, as you could see, for instance, how the private school share in Sweden increased so substantially and outpaced the US scheme. So I think the public-private scheme becomes less adequate actually to determine regime differences, as Espen Andersen always said. I think we really have to look at the market regulation to really tease out the regime differences as well. So thank you very much.